Greetings once again. I will be recording on this question with a company name called Kilo LTD. And in this question, I will be responding to four requirements. And of these four requirements, one requires us to prepare the sales budget. For the 3 months period we are provided the information for, ending at the end of June. We are required to prepare the production budget for the 3 months period, not for 3 months, for the 3 months period. Then direct raw material purchase budget for the 3 months period that we are provided information for. Then after, we are to determine the budgeted break-even units for the company for the 3 months period ending 30 June 2017. And also highlight the fact that for the break-even units, it is for two products, because break-even point for one product, it is very simple. But when the company is producing more than one product or two products, and we are required to calculate break-even point, then there's more calculation to take into account, and also looking at the marks of the break-even point, that it is 12 marks. Reason being is because we are dealing with two products, not one product. Then the question is, how do you calculate a break-even point when the company is producing two products? That is also another question that I'll respond to. It says Kilo LTD is a manufacturer of components that are used as parts for light motor vehicle engines. The company prepared the following budgeted information for the period April to June. So we are provided with the information for the quarter, in other words, which is April, May, and June, because in a year, a quarter is made of 3 months, but there are 4 quarters in a year. And each of these quarters are made of 3 months, 3, 6, 9, 12. Now we are given there are two products, which is product KI and product LO. So now that means when we do that break-even point, we have to do it for these two products. We are provided with the selling price per unit being 500 and 700 respectively, KI and LO. Direct material is quite important in this question, but start with the direct labor. Direct labor, we are provided with 30 Rand, meaning their employees are being paid 30 Rand per hour. And it is 150 Rand that is incurred to complete 1 unit of KI, and 210 rands that is being incurred, or is the cost of direct labor per unit to complete 1 unit of product LO. What does this mean? It means we can be able to calculate the number of hours it takes to complete 1 unit, because we would have said 30 Rand per hour, multiply this by the number of hours it took these employees to complete 1 unit. But we don't know the number of hours, but we know that after we multiplied the number of hours to complete 1 unit, we got into the cost per unit of 150. So now what are we looking for? We are looking for the number of hours it takes to complete 1 unit of product KI and after product LO. So now that means if we do have the 30 Rand, but we are looking for the hours it takes to complete 1 unit of KI, which the cost per unit of direct labor is 150, then we can say, because we are looking for the hours, not the 30 Rand, because we already know, then what we do, we divide by 30, so that 30 cancels 30. Then for every debit entry there is a credit entry. That is what accounting has taught me. And science will tell you that for every action there is a reaction, but in an opposite direction. Now maths will tell you that whatever you do on the left hand side, you must do it on the right hand side. So now that therefore means that 150 Rand per unit, divide this by 30 Rand, which is the rate of labor per hour will tell us that it takes 5 hours to complete 1 unit, 5 hours of direct labor to complete 1 unit of product KI. So we do have the 5 hours, and sometimes it means you can be provided or be given the number of hours and be given the rate per hour, or you can be given the number of hours, which is 5 hours, then after you are given the cost per unit of 150. So now if you were given the 150 and the number of hours, it will be 150 divided by 5. That will still give you, remember, you would have divided by hours. Therefore now whatever you get will be the rate per hour, which is 30 rand per hour if you work that one in reverse. Now coming to the second product, there is not much to explain in details, the same approach. That means we just say the cost per unit, divide this by the rate per hour in order for us to get to the hours it took to complete 1 unit of product LO. So now that will be 210 divided by 30 rand. That means it takes 7 hours for these employees to complete 1 unit of product LO. It's almost the whole day, but KI it took them 5 hours, but LO 7 hours. So that is the standard information that we have calculated so far, and this can be recorded as standard information when we do standard costing. This is 5 hours and 7 hours. Then now we come to the material. The similar will be applied when it comes to material, or the same approach will be applied. Our material is bought at 10 rand per kg, and we don't know how many kgs it takes to complete 1 unit, but after we multiply it by the number of kgs, then it will give us the cost of 80 rand per unit. Therefore now that means we can again say 80 rand divide this by the cost of 10 rand to buy material per kg, meaning we need 8 kgs to complete 1 unit of KI with regards to material A, because we have direct material A and direct material B. So now the same will be used to divide here by 10 rand, then this will give us 12 kgs that are required. So now this will be 8 and 12 kgs that are needed. Then after, we have another component or part of the material called material B, used in the production of these two products. And this material B is bought at a price of 15 rand per kg, and the cost per unit it is 75 rand. Then we know that we have multiplied again by kgs in order for us to get to that 75 rand and 90 rand respectively for product KI and LO. Then again 75 divided by 15 equals 5, meaning here we require 5 kgs, and for the second product 90 divided by 15, here we require 6 kgs. So now here we need 6 kgs after we have divided by 15. It is 6 kgs that are needed, and here 12 kgs and 8 kgs previous. Now overheads, we have them as 50 rand per unit and 60 rand per unit. And overheads are normally, normally absorbed based on direct labor hours, but any base can be used. It can be based on the number of units. It can be based on direct labor hours. It can be based on machine hours. And because that is not mentioned, I don't want to assume that our overheads are absorbed based on direct labor hours. Then I'll leave it like that. But if they were, then we'll be using the number of labor hours, which we know that it was 5 hours there. Then we'll use that one to determine the rate of our overhead per labor hour. We are now provided with the value of the opening inventory. The value of the opening inventory, remember this is in rands. We do have the R there on top indicating that this is in rands. And beside it said the value, meaning it is the amount in rands of the opening inventory, 75,840. and 43,540 for both KI and LO. Then we have opening units, which is 1,800, meaning we can be able to calculate the cost per unit of the units that were manufactured in the previous accounting or production period, which will be 75,840. Divide this by 1,000. That means their cost per unit was 75 rand 84 cents. And I don't want to go in details to this. Otherwise, it is very important, more especially when the company maybe was using another method of absorption. Now they are moving to marginal costing, or the information provided was based on absorption, and now the company is using marginal, or you are required to do marginal income statement, yet the opening inventory was based on the absorption costing system. So that is quite important to be able to go back. But I'm not going to do that now in this question because it is not based on what I'm saying now. The closing inventory units, we are given question mark, meaning we are required to calculate it. There will be information that allows us to calculate such. We have our budgeted sales, which is 10,000, and our 6,000 for product LO. That is our sales that we expect to make during the year. We have information that is additional, which is provided to us, and this additional information tells us that the company plans to have closing inventory. Remember, closing inventory, there was a question mark. The company plans to have closing inventory of 10% of the sales units for the budgeted period. And here is our budgeted sales units for this period that we are busy with, and we are told that 10% of that is the closing inventory, meaning for the 10,000 we'll have 1,000, and for the 6,000 we'll have 600 as our closing inventory. So the closing inventory question has been answered. Now we are told that the company's total fixed cost are 2,800,000 rands. Remember, one of the requirements to calculate break-even point in units, we need our fixed cost in this case. And remember, our overheads, they were variable overheads. So now, meaning the fixed part was not yet included. And there are questions where I dealt with that in terms of how to extract the variable part or the fixed part in the total overheads, where they can tell you that inside is fixed and variable, but they provide us with enough information. I do have records of such. Now we have our fixed cost as 2.8 million that are budgeted. Then after, we are told that inventory on hand at the end of March is 12,000 kgs and for material A and 6,000 kgs for material B. Please be mindful of the fact that when I was referring to these units, these were the units of the finished goods. This was the inventory of finished goods, meaning completed goods. Now we need also to know the inventory of raw material, because when we do our material purchase budget, we need to take into account only the material, not the completed units, but sometimes those two can assist each other. And I'll tell you what do I mean when I say assist each other, more especially in this question. Now, we are told that inventory at the end of March 2017 is 12,000 kgs, and we know that our materials are in kgs. We can see the material A in kgs, it was 12,000 kgs, and for product or for material B it was 6,000. And please also be mindful of the fact that our period that we are provided information for is from April up until June, which is a period of 3 months. That started in April, meaning now the closing balance of the material at the end of March becomes opening balance in April. So now we are referring to the opening inventory here. The fact that it's at the end of the month, it does not mean the closing balance in the current period, but it is the opening balance in the current period, closing balance of the previous period of the 3 months, or closing balance of the previous 3 months or quarter. Then we are told under number 4. Now that means with the material, what do we have? We have opening. Closing, we don't know yet. They say expected closing inventory at the end of June for both material A and material B. Now they are giving us the closing inventory of the raw material should be enough to produce how many units? To produce 500 units of product KI and to produce 400 units of product LO. This is quite important because it is the combination of the completed units that need to be converted through the cages to become the required material to complete the completed units. Yeah, I know I might be saying quite more advanced stuff. Now, it says expected closing inventory at the end of June for material. Remember, for material, A and B should be enough to produce how many units? 500 units of product KI and 400 for product LO. Now that means, in other words, they are saying we need to know how many cages are required to produce 500 units, and we need to know how many cages are required to complete 400 units. Now we need to know it in cages, but we are provided the units in the cages. That means, in other words, we need to know how many cages are required to complete 1 unit. We know that when it comes to material A, we require 8 cages for material A, and for material B we required how many cages? Let me just verify that, but I calculated it before. For material B, it was 75 divided by 15, then that was 5, meaning we needed 5 cages. So now to complete 1 unit, it is 5 cages for product KI. Then now we have done for product LO. That means we need to say now 8 cages of this material. Remember, they said how many units? 500 units of which product? Of product KI. Now remember, we are on the column of product KI. Then we say 500 units. We need to multiply this by 8 in order for it to give us enough material to complete the 500 units through material A. Then we say for material B, we're still producing the same product, which is product KI, that also need material B. We multiply this by the 5 cages to complete 1 unit. So now this means this will be the required material to complete the 500 units of product KI. And we do the same with the product LO, and we say for product LO we need the closing inventory is 400. Then we need to know how much material do we need to complete this 400 units. Remember, for us to complete this 400 units, we need 2 materials first of all, material A and material B. Then we need to say how many cages are required to complete 1 unit for material A in product LO. Now we say we need 12 cages, so it will be 12 cages for 1 unit. For material B, we said we need cages, it will be 6 cages. Just undo there, we need 6 cages. So now these 2, they will be able to complete this 400 in total. That means we say 12 multiply this by 400 and 6 multiply this by 400. That will give us enough material to complete the 400 units, and also enough material to complete the 500 units of product KI. Now I am already now in the material purchase budget, but again I will highlight that when we do that budget, but the figures will remain the same. But let me just do the calculation so that when we go there we are already familiar with the numbers. It will be 500 by 8, which will give us a total of 4,000 cages. Then it will be 500 by 5, then it will give us 2,500. Then now we go to the second product. We say this is the closing inventory. Remember, it will be 400 by 12, which will be 4,800 of material A needed to produce product LO. Then we have 6 by 400. Then this will be 2,400. Closing inventory of material B, that is enough to complete the 400 units of product LO. Now let us move on that very lovely pace. Then it says, at the budgeted presentation meeting, the following amendments to the budget were approved. So there was a meeting that was held and a quorum was met. Then after the quorum was met, then the members that were supposed to be there, they discussed. And in their discussion, they made the following amendments. That the selling price per unit must be increased by 20% for both products. That means our selling price, which currently sits at 500, we must increase this by 20% and increase this by 20%, and I'll multiply by 1.2 and 1.2. 500 by 1.2 will give us 600, meaning the budgeted selling price becomes now 600, and 700 by 1.2 will give us 840, meaning we budget to sell our product in this 3 months period at 600 and 840. Obviously, they considered several reasons why the price must go up. Raw material price per kg. Take note, raw material price, not per unit, per kg. For both product A, for both material A and B must be increased by 10%. Now that means material A kgs per unit and material B kg cost per unit must increase by 10 rand. And I want to highlight the fact that it is the price per kg, not the price per unit. Now that means we are increasing the cost or the price of the material per kg, not the price per unit. We are focusing on the price per kg. That means we are to increase that 30 rand by 1.1 and that 10 rand by 1.1. I think it was 10%. Yes, it's 10%. So now that means 30 rand, let me just write 30 rand by 1.1 and 15 rand, 30 rand. No, 30 rand is the labor. It is 10 rand and 15 rand. So now we'll be increasing the 10 rand and the 15 rand by 10%. That means 10 by 1.1 and 15 by 1.1. Then this will be our expected prices. 10 by 1.1 will give us 11 rand and 15 by 1.1, which is increasing by 10%, it will give us 16 rand 50 cents. That is the material price per kg that is increasing. Our labor is not touched, so that means our labor remains at the 30 rand per hour. There is no expectation of the increase in salaries, but it's obviously during the year. Salaries normally increase around beginning of the year, but depending to each company policy in terms of the increment of their wage or of the wage of the employees. So now we've analyzed all the most important information. Then now we come to divisionalization, which is a topic of another day. And divisionalization is normally a theory, and it's mostly theory. You just have to go and master that theory on divisionalization, because some question can just come on asking you the advantages and the disadvantages of divisionalization, benefits or the bad side of divisionalization. So please read that chapter very detailed. Now we are responding to the requirements: sales budget, production budget, raw material budget, break-even units. And now there's something that we have not seen it yet, because we are given opening, closing and sales, there is no production. So now we need to calculate units that are expected to be produced. And we know that I use this new formula now that says opening is not new in fact, plus production minus sales is equal to closing. I'm just using the equation now. Remember, we are focusing on the opening units. We are on the units that are to be completed, not the inventory of raw material, but inventory of the completed units. We have opening of 1,800. We start with the first product. Opening of 1,000. Production, we don't know. Sales, we know that our sales are 1,000. Is equal to closing, and our closing, it is equal to 1,000. I think sales are 10,000 here. Sales at 10,000. There, I can't see it very well. Delete. Sales at 10,000 and our closing, it is 1,000. It was 10%. If you remember, our closing was 10% of sales. So our sales at 10,000, closing is 1,000. Then we complete that. Our sales at 10,000 and closing, it is 1,000. So plus production minus sales of 10,000 minus sales of 10,000 is equal to closing of 1,000. Remember, we are looking for the production. So now we say our production equals 1,000. That was already on the other side, plus sales of 10,000. When a number goes over the equal sign, it becomes the other sign, minus 100. Let us check if the opening was 1,000 units. So we take that into account, that our opening, it is 1,000. Opening, it is 1,000, so it becomes negative. That means our production now will be a different figure, 10,000 plus 1,000 minus 1,000. It gives us the entire 10,000. Now that means the number of units being manufactured during the year will be 10,000 units for this product. So now our production is 10,000 units. Then after we go to the second product. This was product KI, the number of units to be manufactured. Then we do the same with product LO. Product LO, it will be opening plus production minus sales is equal to closing. Then we look for our opening, which is 800 plus P minus our sales. Our sales will be 6,000. Our closing will be 600. Then we are looking for production. Production will be 600 plus our sales of 6,000 minus 800. Then our production will be a total of those figures. We have 6,000 plus 600 minus 800. 6,000 plus 600 minus 800. That becomes 5,800. 5,800. So this will be our production for product LO. Then now we go to our sales budget that we are required to do. We do our sales budget. There are two products. it is KI and LO, where we expect to sell 10,000 units. And the second one, we expect to sell how many units? 6,000 units. 6,000 units at a price of 600 and at a price of 840. I hope you still remember these numbers, because our selling price went up by 20%. It became 600 and it became 808 and 840. So this will be the new prices. Then we say 10,000 by 600, we get 6 million. Second product, 840 by 6,000, we get 5,040,000. And our total sales revenue expected will be plus 6 million. Then it becomes 11,040,000. This is our sales budget for our two products. Then we come to our production budget. So that means we don't need this one, because we are to calculate our production budget. So this number of units that are to be manufactured will not be relevant in this case, unless you were required to do something else. So we didn't need to calculate the number of units that are to be manufactured, because we do that in the production budget. Production budget, now we have two products. Don't forget, we have two products, which is product KI and product LO. Then we start with our sales or expected sales, and our expected sales, it is 10,000. Please just memorize the formulas, guys. For me, they are already in my head. 10,000 and 6,000. We always say plus closing inventory. Remember, we are referring to closing inventory of finished goods, not closing inventory of raw material. And it was 600 units, which was 10% of the sales. Closing inventory is 600 and 1,000. Then that will give us total units required. It will give us total units required. Then we draw the line here. We will have 11,000. I don't know why I said plus, yet I said minus. Plus closing inventory. Why are we adding closing inventories? Because closing inventory is the number of units that were manufactured in the current period. That's why now we say plus closing inventory. So we add it back so that we know how many units must be manufactured in the current period, because closing inventory would have been manufactured in the current period, because we are using the first in first out method. Then we say less opening inventory. Opening inventory is 1,800, if I'm not mistaken. Opening inventory is 1,800. There we do have one. These are the completed units. It is 1,800. And then we are done. We get to our total units to be produced. Total units to be produced. And these units that need to be produced, obviously here it would be 10,000, and here it becomes 6,600 minus 800. We get to 5,800. We get to 5,800. Now, I did not want to do this in the format that I have erased, but I wanted you to know that the same approach can still be applicable here. So now, but you must do it in the format of the budget. so that it becomes the budget that is having the format it's supposed to have. So now it's 10,000 units and 5,800 units that are expected to be produced during the current period. Now we then do this next budget, and the next budget that were required, we had sales, production and material budget. Sales is done, production it is done, then we come now to the material purchase budget, then after break-even point. Then let's go to the material purchase budget. Material purchase budget. How many materials we have? Material A and material B. And material A appears in two products. Material A and B. Both materials are used in two products. And whenever two materials are used in two products, you need to be very careful in your budget. Then now we know that we start with the production. The production of product KI and product LO. Product KI and product LO. We say now if we want to produce the 10,000 units of product KI, we know that these units they require kgs of material A and material B. And also these units they require kgs of material A and material B. This is what we are to do now. In other words, we are converting our units that we want to produce into kgs of the material. Because we produce these 10,000 units using the material A and our material B. And now we need to know how much material of A is needed to produce the 10,000 units and how much of material B is needed to produce the 10,000 units. Then we need to know the required kgs to complete one unit. How many kgs are required to complete one unit? The minute we know that, then we have mastered everything. So now let us look at the kgs that are required to complete one unit, which we have looked at that already. Now when we looked at that, we said material A to produce product KI, we need 8 kgs. And material B to produce product KI, we needed 5 kgs. So that's exactly what we do. So now we go and you say here by 8, that would be the answer. Here we say multiply by 5. Therefore now that means we say 10,000 times by 8, it gives us 80,000. Then we say here 10,000 by 5, we get 50,000. So now these are the required kgs. So this is material B. Material B 50,000 will go under material B column. Material A kgs will go under material A column. So we'll have 80,000 and we'll have 50,000. This is all product KI, and remember this is all product KI 10,000 units. That has not changed. It's just the format. It's all product KI. Then you go to product LO, and you say product LO requires also material A and B for it to be completed. So now we need to know the required kgs of material A and B with regard to product LO. We need to produce 8,000 units, which must be completed through material A and must be completed through material B. How many kgs are required to complete? We said it is 12 kgs and 6 kgs, if you remember that one. 12 kgs and 6 kgs. And that 12 kgs and 6 kgs came very easily. we did very easy calculations. How we did, we said 210 divided by we said 120 divided by 10 rand and 90 divided by 15, and this gave us 12 and this gave us 6. So that's where this came from. The 15 is the cost per kg, the 10 rand is the cost per kg of material A. So now that means we come and we do our calculation. We say this by 12 kgs and this by 6 kgs. We say how many kgs are required of material A to complete product LO. It will be 12 by 5,800 kgs. This becomes 69,600, and this 5,800 by 6, it will be 34,800. So now that means in order, and let me say this because it is part of the term I've used in another video when I was dealing with the material mix. In order for this product LO to be completed, we need a mix of material A and B, meaning we need a blend of material A and B in 12 kgs and 6 kgs. The mix of the two makes our product LO to be complete and to be the product that we want it to be. So 69,600, 69,600, second one 34,800, 34,800. Then this is our production required, total material required. This is our total material required. Total material required, meaning this is the total material required to produce the 10,000 units and to produce the 5,800 units. Remember, you would have done the calculations here by 8 is to 5, here by 12 is to 6. Then we add the two numbers, 80 plus 69,600 plus 80,000. We get 149,600. And we have 50,000. It will be 84,800. Just added it using my mind. Then we have to say plus closing inventory, plus closing stock. Remember, what are we busy with? We're busy with the material A and material B. This is material budget. So we need a closing inventory of the raw material. Now, did they give us closing inventory? They did not give us closing inventory of raw material, but they told us how to calculate the closing inventory of raw material, because they said to us that the closing inventory of the raw material must be enough to manufacture 500 units of product KI and must be enough to manufacture 400 units of product LO. So now we know that product KI need a mixture of material A and material B, and also product LO need a mixture of material A and also material B. We must not be ignorant of such because it's quite important. Now that means we need to know how many kgs are required to produce 500 units of product KI in terms of material A and material B. So now we go in that, which we have already done. It was 4,002.5 if I still remember very well. Here we have to say now product KI. We say in this 500 by 8. Then you say this 500 by 5. Then after this will give us 4,000. Just want to verify that. We have 500 by 8, which is 4,000. Then 5 by 500, 2.5. 2,500. What does this mean? This means 4,000 kgs of material A and 2,500 kgs of material B is able to produce or is enough to produce 500 units of product Ki. That's what in simple terms it means. 4,000 kgs of material A and 2.5 kgs of material B blended together are enough to manufacture 500 units of product Ki. Now let me leave you with that. I think it's enough explanation. Please leave the calculations, the fact that I'm erasing that I don't have very much good writing. Then we come now to product LO. Product LO closing inventory, they said it must be 400. We must have inventory that is enough to produce 400 units of product LO. Remember, 400 units of product LO are completed units. And we are not looking for the completed units. We are looking for the raw material that is enough to produce the completed units of 400. So now again we go to the issue of the mix of the two materials that are mixed at 12 and mixed at 6. So now we say 400 by 12, it gives us 4,800. Then we say 400 by 6, it gives us 2,400. Then we can draw a line here in order for us to get to the total of what we are looking. 2.4 plus 2.5, we get 4,900 as our closing inventory. 4.9 is our closing inventory, that must be added. And 4,000 plus 4,800, it is 8,800 kgs that are needed as closing inventory. So now, in other words, we need total of 8,800 kgs of material A, of which 4,000 is for product Ki and 4.8 is for product LO. And also we need 4,900 kgs of material B, of which 2.5 is reserved for product LO and 2.4 is reserved for product LO, Ki and LO respectively. Now it's very important to master what I'm explaining in this chapter and other topics, by the way. Then after now we have to further say 149,600 plus we are adding here and we adding also here. Just draw the line further. 8.8 plus 149,600, and this gives us 149,600 plus 8,800. This gives us 158,400. Then we have 84,800 plus 4,900. This gives us 89,700. Then this becomes the total purchase material. Then now we go to the opening. Then we say less opening. Now before we say less opening, this will be the material required. This will be material required. And again, this line is not very much important, but I normally like to show it. So now if you did not show this line, it's still not a problem. You can leave it there and just go straight to saying less opening. Remember, opening was already there. We don't need to buy the opening. It's already available. It was bought in the previous period. So now hence also in the opening here, in the previous budget, we minus the opening. Why? Because the opening would have been produced already from the previous period. In this case, opening would have been purchased already in the previous period and became opening. So now we look for the opening units, which is provided to us as 12,000 and 6,000 kgs A and B respectively. 12,000 and 6,000 kgs. Then we are now able to say 149,600 plus 8.8 minus 12,000. We get 146,400. The second product, it will be 84,800 plus 4.9 minus 6,000. We get 83,700. Then here, this will be the total material purchases, the material that we need to buy. Total material purchases. We don't need to buy the 12,000 and the 6,000 because it's already there. It was bought in the previous period and we're happy with it. It's good quality. We'll be using that material. Then we multiply now by the price per kg. Price per kg. And our price per kg was 11 rand and 16 rand 50 if my memory still serves me. It was 11 rand and 16 rand 50, where we said this must increase by 10% and this must increase by 10%. The material was required to increase by 10%. And where did that come? It came from raw material price per kg must increase by 10%. So now we have to increase our material price per kg by 10% or cost per kg by 10%. And we said 10 times 1.1 gave us 11. And we said 15 by 1.1 it gave us 16.50. So that's where I'm taking the figures. So now we draw here, then we get to the value of the purchases. This will be the total purchases. And our total purchases is the price that we are going to pay. 83,700. We get 138,1050. And 11 by 146,400, we get 261,400. Now this is where the purchase budget will stop. Then we go to the last requirement, very lovely requirement, and I love the break-even point calculation. Now we are required to calculate our break-even point now. Break-even point, few minutes, 1212, we're done. Break-even point that is budgeted by the end of this quarter. Now we know that our break-even point in units, it is simple. We say break-even point in units, it is fixed cost divide this by contribution per unit. Contribution per unit. In this case, our fixed costs are given as 2,800,000. Then let us hold it there because we don't have the contribution yet. We need to calculate the contribution for two products. That is very much important to note, that contribution for the two products. And when there are two products, I will explain the other dimensions as we progress. We have product KI and product LO. we have our selling price. Sales price is 608.40. Remember, there was an increase. We less our variable cost, and our variable cost, we have material first, direct material, where we have material A and B, and our material, it is at the price of 11 Rand currently as we speak, and we multiply by the required kgs of product AI, then we get the cost per unit. 11 by 8, we get 88 Rand. I hope you know where the 8 is coming from. It is the required kgs to complete 1 unit of product KI with material A. We said 80 divided by 10, it gave us 8 kgs. And we said 75 divided by 15, this gave us 5. So these are the figures that I'm focusing when it comes to product KI. And here we divided by 10, we got 12 kgs per unit. Divided here by 15, and we got 6. Then after we come to product LO, we still need the same 11, but at 12 now, at 12 Rand per kg. 11 times by 12, it is 132 Rand. Then we come to material B. Material B price is 16 Rand 50, and the required kgs of product KI to complete 1 unit. With regard to material B, it is 5. Then we say material B is 16 Rand 50 cents, and the required kgs to complete will be 6 kgs. Then we go on that now, and we say 16.5 by 5, it is 82 Rand 50. Then we say 16.5 by 6, we get 99 Rand. Then after we have overheads that are variable, and our overheads that are variable, there was no change to them, so we'll take them as they are. Our overheads that were variable, it was 50 Rand and 60 Rand, and there was no other variable cost, 50 and 60. So we draw the line and we calculate our total variable cost. Total variable cost, 88 plus 82.5 plus 50, it is 200 and there is one cost that we have left, labor. How can we forget that one? We have direct labor. Our direct labor did not change. It was 30 Rand per unit, per hour. We need it per unit. There was no change. It was 150 and 210. 150 and 210. From there is no other variable cost. So we have 88 plus 82.5 plus 50 plus 210. We get 410. Let me just do the calculation very well. We have 150 of labor. We have 82 or 50 Rand first, plus 88 plus 82.50 plus 82.5. We have 370.50. 132 plus 99 plus 60 plus 210, we get 501. Minus 840, 339, 370.50 minus 600, we get 229.50. This is our contribution per unit. Contribution per unit. Now we need to multiply this by what you call the sales mix ratio. Sales mix ratio is more like answering the question to say how many units of product A are sold compared to product B, which is LO and KI in this case. And now we always take our sales mix from the number of units sold. We have 10,000 units and here we have 6,000 units. We need to first look for the common denominator, where we divide by 2,000 because 2,000 goes to all of them and leaves no remainder. This becomes 5:3. This is our ratio, meaning for every 5 units sold for product KI, 3 units of product LO are sold. That's what this ratio means. For every 5 units of product KI sold, 3 units of product LO are sold. So now that is the ratio that we multiply the sales mix ratio. We multiply by 5 and 3, which is 5:3. Whenever you have 2 products that the company is manufacturing and you are required to calculate the break even. Then now multiplying that, it will give us the contribution per mix per unit. It will be contribution mix per unit. Contribution mix per unit, and this is what we want. Contribution mix per unit will be by 5. It will be 1,147.70, and 339 by 3, we get 1,017 rand. Then after we add the two, 1,147.7 is equal to total contribution mix 2,164.70, which is the sum of the two, 1017 plus 1147.7. Then this will be the contribution mix that we are using, the total contribution mix per unit, 2146.70. That is the amount that we use to calculate our break-even point. So now we can say here divide by 2164.50, 2164.50. I just verify that figure. We have 1147.50. This is 0.50. 1147.50. This is 229.5 by 5. Yes, this is 0.50 plus 1017. We get 2164.50. This is our contribution, 2164.50. 2,164.50 cents. This is our contribution mix. Then we are able to say 2,800,000 divided by 2,164.50 cents. Then this will give us 1,294. 1,294. batches, and these are batches. Then after, what do we do now? We say for product KI, how many units, and for product LO, this is KI and this is LO. For KI it will be 1294, which is the batches, and 1294 multiply this by the sales mix ratio. Always do that. 1294 by 5, we get 6470. 1294 by 3, we get 3882. So this is the number of units that must be sold for product KI. In order for product KI to break even, and the number of units of product LO that must be sold in order for product LO to be at the break even. Remember, if it sticks in the same ratio, that will be true, meaning in the ratio of every 5 units sold, there will be 3 units that will be sold for product LO. So now this is how you calculate the break-even units when it comes to 2 products. Very important to be able to calculate your sales mix ratio of 5:3. Make sure that you always calculate that mix, and you must use the lowest common denominator, which in this case 2000 was fitting to both of the products and left no remainder. So you do this to its lowest multiple. 2000 was perfect and there was no remainder. Yeah guys, with that, you've been very lovely audience. God be with you. Thank you.